Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at Ondas.
If you find our talks useful, please consider subscribe, like, and comment underneath.
Usually when we sit down to analyze a company like this, a small cap defense tech, we have to start with a dozen caveats. We're normally looking at companies with great presentations, pretty cool prototype, but, well, absolutely zero significant revenue.
Right. The concept stock trap.
Exactly. It's that classic science project phase where investors are basically just buying a lottery ticket.
Yeah, you buy the dream, and 3 years later, you're still waiting for the first unit to ship while they dilute your shares just to keep the lights on. But looking at the data you pulled for Ondas today, this feels, I don't know, qualitatively different. The numbers suggest they've already crossed that valley of death that kills so many of these startups.
That is precisely why we are talking about them today. We are not looking at a slow climb or some sort of gradual ramp up. We are looking at a company that has, well, effectively signaled a vertical takeoff.
A vertical takeoff.
The transition from R&D to commercial scale deployment. It's happening right now, in real time. And the sheer magnitude of this shift has frankly caught a lot of the institutional crowd off guard.
Vertical is a pretty strong word, but the guidance seems to back it up. I was digging through the filings and the press releases, and the revenue projections aren't just ticking up, they're multiplying. So let's just strip away the hype for a second. Why is everyone suddenly paying attention to Ondas now?
It's the guidance beat. It forced a complete repricing of the risk. So let's look at the immediate picture first, the full year 2025. Ondas is projecting revenue between $47.6 million and $49.6 million.
Okay. Playing devil's advocate here. $50 million is a decent number, sure. But in the grand scheme of defense contracting, where we're talking billions, that's a rounding error for a Lockheed or a Raytheon. So why should we care about $50 million?
Context is everything here. That number. It represents a 23% beat against their own earlier targets. In this sector, small cap companies usually miss targets, right? They lower guidance as they run into what Elon Musk calls manufacturing hell. Ondas is doing the opposite. They're blowing past them. But the real signal isn't even the full year. It's what's happening in the fourth quarter.
You mean the Q4 2025 number specifically?
Exactly. Just look at the pacing. They expect to hit between 27 and 29 million in Q4 alone. That's a 51% increase over prior guidance for just that one quarter.
Hold on, let me contextualize that for you, the listener, because that is a massive detail. If they're doing roughly $48 million for the entire year, and $28 million of that is coming in just the last 3 months?
Yep.
That means the business is heavily backloaded. They're generating more than half their annual revenue in the final quarter. That just screams deployment.
Precisely. It signals that the contracts aren't just signed pieces of paper anymore. The hardware is leaving the loading dock. That hockey stick chart we always talk about, it's actually materializing. But honestly, the 2025 beat is just the appetizer. The reason the whales and the smart money are circling this stock right now is the 2026 outlook.
I saw this and I had to double check the math because it looked like a typo in the release.
No typo. Management raised their 2026 revenue guidance from $140 million to a range of $170 to $180 million.
So we go from roughly $48 million in 2025 to $180 million in 2026. That is
what?
Nearly a 300% increase year over year.
It's about a 260 to 280% growth rate from the midpoint. And look, when a management team goes on record projecting that kind of triple-digit explosion, they are not guessing. You don't project 180 million based on hope.
No, you project it based on backlog.
You project that based on backlog and a qualified pipeline. They are telling the market, we are no longer testing, we are deploying at scale.
That changes the investment thesis entirely, doesn't it? You aren't funding the invention of the drone anymore, you're funding the manufacturing of it. But huge revenue jumps usually bring huge operational headaches, which I know we'll get to. First, I want to understand the how. How do you triple revenue in 12 months? What are they actually selling? Because the drone market is crowded.
This is where Ondas differentiates itself from just any other generic drone stock. If they were just selling flying cameras, I'd tell you to run for the hills. Hardware is a race to the bottom on margins.
Right.
But Ondas has built what they call a system of systems.
System of systems. Okay, that sounds like classic corporate buzzword bingo. Is there actual substance to that, or is it just marketing fluff?
In this case, I think it's a genuine competitive moat. Think of it this way. You don't just buy a drone from Ondas. You buy the entire ecosystem. They provide the autonomous hardware, the air and ground robots, but they also provide the software to run them and, crucially, the connectivity layer.
You're talking of the Ondas networks piece, the full max private wireless.
Exactly. And this is the part most investors just gloss over because it's not as sexy as a robot dog.
Yeah.
But imagine you are a defense commander or an oil pipeline operator. You are in a mission-critical environment. You can't rely on public 5G, which might have dead zones, and you certainly can't use standard Wi-Fi. You need a dedicated, secure, private network that you control.
So Ondas provides the nervous system, not just the muscle.
That's the perfect analogy.
Okay.
The full max wireless stack is the nervous system. Without it, the drone is useless. And once a customer installs that infrastructure, the switching costs become incredibly high. You can't just swap out an Ondas drone for a cheaper competitor's because the competitor's drone doesn't speak the language of that secure network you just spent millions installing.
It creates lock-in. It's the Apple ecosystem model, but for the battlefield and for industry. You buy the Ondas drone, you get trapped in the network.
Bingo.
Yeah.
And within this system of systems, they have specific growth engines firing on all cylinders right now. The primary driver for that 2026 number is Ondas Autonomous Systems, or OAS.
This is where the cool toys live. The Iron Drone Raider and Optimus.
Yes, and the Iron Drone Raider is particularly relevant, given current geopolitics.
Yeah.
It's an interceptor. Its job is to physically neutralize other drones. We've all seen the news drone warfare is the new standard. The demand for counter-UAS or counter-unmanned aerial systems is practically infinite right now.
And it's not just things that fly. I noticed they've been pretty aggressive with M&A. They bought RoboTeam and Apero Motion.
Right. RoboTeam focuses on ground robotics, unmanned ground vehicles. That segment alone is contributing about $3 to $4 million in 2025. So you have air superiority with Iron Drone and ground support with RoboTeam. But there is one specific contract that I think validates their tech better than any slide deck ever could.
You're referring to the demining contract.
The 4M Smart demining contract, yes. Ondas secured a $30 million multi-year contract for demining operations in Israel.
That is a grim business, but a necessary one. And $30 million is a serious chunk of change for a company of this size.
It is, but look beyond the dollar figure. Demining is a zero failure tolerance operation. If a bridge inspection drone fails, you just fly it again. If a demining robot fails, people can die. Equipment gets destroyed. Winning a $30 million contract for active demining in a conflict zone is the ultimate stamp of approval.
It's field-proven validation. You can't fake reliability in a minefield. Okay, so we have the financial guidance pointing to a breakout, and we have the system of systems creating a moat. But let's look at the tape. The market is usually efficient. If a company is about to triple revenue, the stock is already priced for it. What's been happening?
February was wild. It was just this flurry of activity that tells a story. If you track the press releases, you can see the dominoes falling. It started on February 9th, 2026, with that $30 million demining win we just discussed.
Okay, so that set the floor, gave the market some long-term revenue visibility.
Right. But then the NATO dominance started. Just 4 days later, February 13th, they announced a multi-million-dollar order for the Iron Drone Raider from a NATO territory.
NATO territory. That is the magic phrase in defense tech. It implies deep pockets, standardized procurement, and usually follow-on orders.
Exactly. But they weren't done. 4 days after that, on February 17th, they drop another announcement. Another multi-million-dollar Iron Drone Raider order from a different NATO country customer.
2 separate NATO orders in less than a week. That doesn't happen by accident. That sounds like a coordinated procurement cycle closing all at once.
It absolutely does, and the market woke up. On February 17th, the stock jumped, 8.49% in a single session. But what's more interesting to me is the resilience. Even when the broader markets have been choppy, Ondas has been trading in this tight little range, roughly 897 to 931.
It's coiling. It's refusing to give back the gains.
And it's not just retail traders getting excited. We have seen whale alerts.
I love tracking the whales. For anyone who might be new to that term, we're talking about unusual institutional activity block trades, massive option sweeps, the smart money.
On both February 13th and February 17th, the exact dates of those NATO announcements, we saw sophisticated investor activity in Ondas options. Someone with very deep pockets was positioning themselves aggressively.
That is always the signal to watch. Retail reacts to news. Institutions position for news. If they are piling in, they likely expect that $180 million guidance to be reaffirmed or even beaten.
However, we need to take a step back. It is my job to be the buzzkill.
The bear case, please. Because frankly, going from 48 million to 180 million is a logistical nightmare. It sounds great in a press release, but actually moving that much product, that is where companies break.
That is the number one risk. Execution. It's not about demand anymore. We know the demand is there. It's about capability. And remember, Ondas isn't just one smooth machine. They are a Frankenstein of acquisitions.
Right, you mentioned that M&A spree.
They are trying to integrate
Yeah.
five different tech stacks: American Robotics, Aerobotics, Apparomotion, Roboteam, Centrix, and 4M. That is 5 different corporate cultures, 5 different supply chains.
That is a corporate spaghetti bowl. I've seen massive companies fail at integrating just one acquisition, trying to harmonize 5 while you're tripling output. That is a recipe for disaster if management isn't absolutely laser-focused.
Absolutely. Manufacturing bottlenecks are the real enemy here. If they get the orders but can't source the chips or can't assemble the drones fast enough, that revenue gets pushed into 2027. The stock will get punished severely for any kind of delay.
So what are they doing about that? Are they building new factories?
They've stated they are increasing manufacturing capacity significantly for 2026, but they're also being smart about it. They aren't trying to do direct sales for everything. They're leaning on reseller networks, like their partnership with Drone Nerds.
Drone nerds.
Yes, a major distributor. By offloading sales and support to partners, Ondas can focus purely on the integration and manufacturing. Plus, their manufacturing is NDAA compliant.
National Defense Authorization Act, crucial for selling to the U.S. military. Basically means no Chinese parts.
Correct. Which actually simplifies their supply chain risk in a way. They aren't reliant on a geopolitical adversary for their components, which helps de-risk the production line. But there is another risk we can't ignore: financial health.
Let me guess. They are growing fast, but they are burning cash.
They're unprofitable. That's typical for this growth phase, but it really matters for valuation. Ondas trades at a premium because you're paying for that future growth. If that growth slows, if they hit 100 million instead of 170, the valuation multiple just collapses.
So it's priced for perfection, or at least priced for very high execution.
It is. But the safety net is the backlog. That $30 million demining contract isn't a maybe, it's signed. The structural increase in global defense spending provides a floor. NATO countries are not cutting their drone budgets. If anything, they're panic buying.
That's a fair point. The macro environment is a massive tailwind. So, looking ahead, what should we be watching? What are the next dominoes to fall?
There are a few speculative catalysts. Keep an eye on something called Ondas Capital.
What's that? Their own little investment arm.
It's an advisory arm they're building. It sounds a little boring, but it could be the gateway to strategic partnerships with the prime defense contractors. Think of Ondas technology getting integrated into a massive system from a Lockheed or a General Dynamics.
That would be the exit strategy, or at least a massive validation event. Getting access to a prime sales channel, that's worth its weight in gold.
And then there's the commercial side. We focus on defense, but that full-max private wireless has huge potential in rail, utilities, oil and gas. As 5G and 6G mature, all these industries need reliable private networks. That is the sleeping giant in their portfolio.
So defense pays the bills today, infrastructure provides the recurring revenue tomorrow.
Exactly. In terms of the calendar, all eyes should be on the Q1 2026 earnings, likely late February or early March. That will be the moment of truth. Also, watch the defense conferences like AUSA in March and April. They often announce new customers there.
Okay. We've looked at the explosive growth guidance, the system of systems moat, the very real risks of integrating 5 companies, and the whale activity. It's time for the verdict. Where do you land on Ondas?
I've weighed the execution risk against the verified demand. I'm giving Ondas a bullish score of 8.5 out of 10.
8.5? That is one of your higher scores recently.
It is, and here's the rationale.
Yeah.
It's a high-growth defense tech play that is actually transitioning. It's not a concept stock anymore. They have verified contract wins, a defensible ecosystem, and they are riding the strongest geopolitical tailwind we've seen in decades.
Then the time frame.
I'd recommend a 12 to 24-month hold. You have to give them time to execute that 2026 ramp-up. If you want the elevator pitch, it's this. Ondas is sitting at the intersection of NATO expansion, border security, and autonomous defense. They have the right tech at the exact right time.
That intersection, NATO, borders, autonomy, is probably the most well-funded intersection on the planet right now.
It really is.
You know, I want to leave the listener with one final thought to mull over. We talked about the whales, the big money, moving in just days before the contract news. We know about the 2 NATO contracts and the Israel deal. But usually when institutional money moves that aggressively, they aren't just reacting to yesterday's news. It makes you wonder, does the smart money know something about the next NATO contracts that hasn't been announced yet? Because if 2026 is truly going to be a $180 million year, those two orders we saw in February, they're just the tip of the iceberg. There are a lot more announcements coming down the pipe.
That is the multi-million-dollar question, isn't it?
Indeed it is. Thank you all for joining us on this deep dive into Ondas. Hopefully this helps you cut through the noise.
Thanks for listening.
We'll see you next time.